Hello, 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 and welcome to the Scottic Trading Futures Daily Trade Setups video recap for the week. And we're going to go through quite a bit of material here, so this video may be a little bit longer than normal, but we want to cover everything that we have missed since the last time we spoke. All right, so I just want to remind you guys of our free risk-free 14-day trial subscription to our daily futures trading levels. This service will give you entry levels and targets for the ES, which is the S&P futures, the NQ, which is the Nasdaq futures, the YM, which is the Dow futures, and the RTY, which is the Russell 2000 futures, every day before 9:30 a.m. U.S. time. Please note that this 14-day subscription, your credit will be charged and prorated at $25 a month, and then it will continue from there forward at $50 a month, and you could cancel at any time. So before we go on to the data and looking at the markets and the charts, let's do everything that we're supposed to do, and let's follow the rules and just get ahead and do all our house cleaning. Disclaimer, please be advised that scalper trading is not a licensed financial advisor or registered investment advisor, and this material has been prepared for entertainment and informational purposes only, and is not intended to be relied upon as investment, financial, accounting, tax, legal, regulatory, or similar advice, and it is not an endorsement of any provider, product, or service. All right, that was long-winded. Maybe not do that so long next time. But let's do what we do every day and take a look at the email. First thing comes out, we sent out our email. This was Friday, the 3rd of October, which was yesterday. So by my calculations, we get our emails out before 9:30, and the email includes all of the daily levels. We can see here we had a daily level on the Nasdaq futures above the level of 25,192, which it never did that. 192.75. You would go long. We never triggered that long. We did trigger the short side, however, at 25,112, and it did pretty well on that side. As for the Dow futures, same idea. The Dow futures also here triggered a long side, 46,949. That did trigger. It also triggered a short side that didn't do too well at 46,048. And the trigger in this case, guys, is just a trade below, not even a close above or below. It's just a trade above or below, and that's what happened on the Dow and the Nasdaq and the S&P. Same story. You have your levels here, and we send this information out in the targets as well that come up to give you an idea of where you should expect these markets to go before you get in. And you can see here, and once again, these levels are valid the entire day, so that's a good thing. Now, so let's go and see what we do after the end of the day, and we send out a second email as a recap with an illustration of exactly what happened. And you can see here it came in basically just before the market opened, because our trading day was actually done before 342, but we got everything compiled and put together, and you can see the Nasdaq short hit all targets. The Dow short it triggered short, but it didn't hit any targets. The Dow long hit all targets. The the S&P, it hit no targets on the short side, hit the first two targets on the long side, and the Russell did pretty much the same thing, except it hit all targets. So the long side for the Russell and the S&P and the Dow was very, very good. The short side for the Nasdaq was very, very good. It never faked us out. So let's take a look at the chart itself, and you can see here's a little screenshot of the chart. The first target dropped and below 25. The first trade triggered at 9:55. Is traded below, not a close below. It traded below that level of 25,112 and ran down 20 points, not ticks, 20 points on the Nasdaq. That would be 4 times that number for ticks, which would probably be 81 ticks. And every tick is $5. Every point is 20. So you can do the math there, and that would be 20 times 20, which was 400, and that roughly that number. And then you had 40 ticks on the second target, and it rallied back up. And if you had 3 lots or 3 contracts, you would take first target here, second target there, and move up and move back down. And the third target was 80.75 points, which was absolutely brilliant. Nice textbook move down and rally back up, creating a lower high and move back out. All right, moving on to our next chart, the Dow. The Dow, however, did a little tricky thing. It triggered short, came back down, and didn't hit any targets. It got close to that first target, but it was like 1 or 2 ticks away, and we count that as not a hit. It did not touch it, so it doesn't count. And the second target and third targets are not hit, but it reversed so strongly it just ran up, triggered at 9:30. This was prior to the market open. At 9:30, market open and just rallied back up like it shot out of a barrel, and it just went nutso. And you see the top third target was 101 points. And on the Dow, 101 is the actual tick. There's 1 point for every tick. There's no multiplier there. Moving right along to the S&P. The S&P also tricked us out and it didn't hit the short targets, and it rallied back up, poked its head above that level, came back down and created a higher low than the previous low here, and rallied up, hit our first target and then our second target. Didn't quite make the third target and came back down. And actually, we only do 2 trades per market, but you can see here 2 trades per day per market, keeping our numbers conservative. You can see here this would have been a successful for one first target, second target trade if you decided to do it again. Not recommending anything there. And lastly, the Russell did the same thing as the Dow, tricked us, fake out to the downside and reversed strongly and just ran up nuts. Sometimes the Dow and the Russell both work together, which people would call correlate, like the S&P and the NASDAQ correlate sometimes. The Russell and the Dow correlate sometimes. For whatever the reason is, I want to get into the scientific understanding, but just understanding that it's possible. So with that, that is something that we are definitely excited about. So let's get to where we need to go, which would be back here, not there. We're going to go to our overall results, going back to over a week ago, back on the 23rd, I think was the last time we posted a video, and you can see our results. Let's start with the NASDAQ. We always start with the NASDAQ, going back to that time. The NASDAQ did very well that week on that first target, which is basically the smaller target, and the smaller targets are always easier to hit, high percentage there. Then you got our second target, a third target, etc., and you can see this week, this most recent week, we are 6 out of 8 targets on the first, 5 out of 8, and as you go down to the fourth target, it just gets less and less accurate. However, you can see that the points made are sometimes double or more than on the fourth target than it is on the first target. Why? Because there's a bigger target, then the accuracy is not as great, but the points make up for that if you can manage your trades that well. The overall numbers, we are above 83% on the first target, 70% on the second target, and it just goes down as you go along. And as you can see, this is as of October 3rd. Target number 1, 4,839 points, not ticks. And that is, very, very nice to see. And second target is a little bit higher. Third target is even higher than that. Then we go to the YM, the Dow futures, same sort of situation we looked at last week, and we can see 100% of the first targets were hit, 239 points, and that's the probability is in your favor on the first target. It's a point. If you want to stay longer for more profits, you have to manage that accordingly. Going again to the second, going to this week, this ending, first target hit 6 out of 8 triggers, and so on, going down again for there. But overall, we can see 84% of the time that first target is hit. And basically, if you were doing it in 84 out of 100 times, that's 16 times it doesn't make it. 84 times it would make it. And that's kind of what we're looking at, a high probability aspect of it. You see 7,400 points. This is all since April of 2025. Okay, moving right along to the targets 2, 12,000, and target 3, 15,000. Basically double. 46% is still not bad if you can manage your risk accordingly, hitting that target. Okay, moving right along to the ES, same sort of story. 79% on the first target, 63% on the second. Third target is always going to be right around 35 to 50%. And we can see not too great a week as we would prefer. Previous week was 75%, 85% the week before that. But we do looking at a high probability again as of October 3rd. Moving right along, again you see for the week of the 26th, 87% on the first target, 85% for the first target on this week just ending, and overall right around 79%. So very, very profitable system. Targets are simple to understand and predetermined, and you can just relax and trade the levels. Okay, that was for the Russell. If you so if you whatever market you want to trade, you have the availability to it. Lastly, we're going to take a look at the news for the month of October. Let's scroll back up here to the 1st of October. We see there was ISM manufacturing. That was Wednesday, this past Wednesday, Thursday. There was not much. Friday, we were looking for non-farm payroll, which did not occur because of the U.S. government shutdown. That was the reason for that not happening. And moving into Monday, we see we have nothing much there. We have an FOMC member speaking. Tuesday, some more FOMC members speaking. No major red flag events. Right here, we're looking at, you see yellow, orange, and red, and gray. Gray is a bank holiday. It means nothing's going on. These are news events, and that basically tells us high impact if it's red, medium impact if it's orange, low impact if it's low. We are concerned about high impact for the U.S. market, USD. And we can see Wednesday we have FOMC minutes. That's going to be interesting. It's at 2 p.m. U.S. time, Eastern. That's going to be important because that can make the markets go crazy one way or the other, depending on what is said by the Fed chair. And then Thursday we have unemployment claims just before the market opens. It says tentative. Interesting. Why is it tentative? We got two listings there. Release date delayed due to U.S. government shutdown. See, it's telling us why it's tentative. And then Friday we have another tentative red flag event. 3 of them actually. Non-farm payroll. It's all tentative, and that's probably also going to be because of the U.S. government shutdown. So the government shutdown, if it does not get back up and running, we may have to push these announcements off for another week or more, depending on how long this goes. And there are a lot of suspects or predictions as to when it's going to end and why, et cetera, et cetera. We're not here for that sort of stuff. We're here for the raw information, raw trading. Keep it simple. All right, so just be ready for this week, and if you need our help, just email us, start your free trial, and follow along as we develop this system and show you how to make money in the markets. So until next time, trade safe, take care, God bless, and bye-bye.